The Indian market opens higher and builds on gains as comments from the US President Donald Trump and Prime Minister Narendra Modi's comments suggest some kind of approachment between the two countries. The Nifty approaches 26,100 as all sectors trade with gains, with IT stocks leading the way higher.
And shares of Bharat Forge surge as reports suggest that Bharat Forge and PLR Systems win a rupees 2,770 crore order for close quarter carbines from the Indian Army.
Shares of Infosys rise as much as 4%. The stock is a top Nifty gainer after the company's promoters opt out of participating in the 18,000 crore rupee buyback.
And shares of NMDC fall after firm cut iron ore prices effective Wednesday. Morgan Stanley says that the price cuts are surprise as it expected domestic iron ore prices to be stable in the near term.
Shares of United Breweries rise after the promoter Heineken's Q3 update reflects Indian organic net revenue growing in mid-single digits, while the price mix also suggests a high single-digit expansion. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Vinny. And Vinny is the good luck charm today. The market's scaling new highs, so we said let's get a little bit of Vinny on the show. Vinny, markets above the 26,000 odd mark, things looking good, bracing for fresh all-time highs. The bulls will be feeling good.
Bulls will be feeling good. And Nigel, if I was the lucky charm, I think I would be sitting here and, then the Bulls would be like, just keep her so we can see the rally continue. But yesterday, there's no complaining. 26,000. First time in 2025 that we've seen this 26,000 come in. And all sectors today are trading in the green. Yeah. No complaining there. And IT doing well.
I think it's a rocket, right? I mean, since we're keeping in sync with the Diwali celebrations, a fataka is what we're calling for on the Nifty. And you have a rocket as well as we speak on the Nifty, particularly on the IT index. But are we good for more? Sachit Anandutekar from Trade Bull joins us on the show. Hi, Sachi. Good morning. Good to see you, Vin. Wishing you, your team, your family a very, very happy New Year. Happy Diwali as well. And hopefully this year is going to be super. The start has been good, at least for the equity markets. What do you think? 26,100 we are at. How would you trade the Nifty from here on? Take some money off the table, or would you trail with the stop loss?
Good morning, Nigel, and wishing you a very prosperous new year to you and your family and all the viewers of CNBC-TV18. So if you look at the market performance, I think we have seen a very strong, significant rally, and this is what we have communicated a couple of weeks back to our clients as well. We see this particular somewhat on a very positive note. In fact, we are expecting that the momentum in Nifty could continue throughout this particular year, and we may see the Nifty scaling towards 27,255 kind of a zone. Even from a short-term momentum perspective, I think the way the floor was set last week, the way the data is getting built up, the supports are shifting higher. So from here on, I think the significant level on the lower side could be somewhere close to around 25,940, and until this we don't see a closing below the same, we expect that this particular momentum will continue towards 26,400. So we are expecting that the way the markets are trending right now, we may see the continuation of this particular momentum, and we may see the Nifty scaling towards 26,400, 26,500 during this particular series itself. When we look at Nifty Bank, there is a kind of a cap which we are observing, maybe around 58,700, 800 could be a cluster resistance. But on the lower side, there's a decent support now, which is getting built up at around 58,000. So probably we may see the Nifty Bank consolidating on the higher side, but the way Nifty IT and Nifty Pharma are positioning, there could be some strength which would be evident in the next couple of trading sessions. So we are expecting this momentum to continue when it comes to Nifty towards 26,400.
Okay, expect this momentum to continue. 26,400, this series itself, it's where we could see for the Nifty 50, keeping an eye on that. Sachidanand, what are the stocks that you're looking at as well?
Good morning, Vinny. First of all, if you look at the way banks have been performing, especially we've already seen a good rally in PSU banks, but there are certain mid-sized banks which are started performing recently. From this particular space, IDFC First Bank, which has been trending since last 4 trading sessions. It has managed to display a breakout from a consolidation. In fact, it's a rounding pattern formation on the daily scale, which is exhibiting a price target of around 90 levels. From a trading perspective as well, we are expecting this particular momentum to stretch towards 84 immediately, and hence we are still recommending building long positions in the IDFC First Bank's futures. The stop loss for the trade can be placed at around 77.30 on closing basis, and positions can be reviewed at around 84 levels because we are looking at the pattern target of around 90. On the other side, we have already seen some very significant build-up in some of the capital goods space. If you look at the way Siemens, has been performing, it was in a lower top, low bottom cluster, but it has maintained its closing above its 200-day exponential moving average. Today, it has made a first attempt to cross its 50-day exponential moving average, which is placed at around 3160, and that's why we believe that this can be an ideal candidate for a short squeeze momentum. So hence we are expecting that the moment we see this particular stock, trending about 3160 levels, there could be further short covering, which may push the stock higher towards 3260. And hence we are recommending building fresh long positions with a stop loss at around 3132 on closing basis.
Lovely. Thanks a lot for that, Sachi, and wishing you a good day ahead. But let's focus on the stock of the morning, Infosys. Rima joins us to tell us more about what's got that stock excited. Rima?
Well, a couple of reasons. One, the Infosys promoters have said that they will not be participating in the current buyback. 18,000 crore is the buyback. Promoters hold about a 13% stake. So if 13% of the shareholding is not participating, that means the acceptance ratio for the balance goes up. And just to recap, Infosys had announced a tender buyback of 18,000 crore rupees at 1,800 rupees per share. The question is, the promoters not participating, is it because they see long-term value creation and they're very bullish, or is it on account of the tax treatment? Because it's quite inefficient for high net worth individuals to participate in buybacks now, because the entire income is treated, at the highest tax slab. But secondly, even some clarification on the H-1B visa is supporting IT stocks. So basically, the large, onerous 100,000 visa fee is not eligible for international students who are applying to H-1B, or if you have an H-1B visa but you're changing your employer base, or you're currently residing in the United States. So it's not applicable to them. So some clarification coming in. And also remember, the earnings were not bad, and the IT stocks, largely have been under pressure, and Infosys itself from the start of the year is down 19%.
Okay, Rima, thank you so much for that. We'll keep an eye out on Infosys going forward as well. Let's move on and talk about Bharat Forge, because in the broader end of the market, that is one of those top gainers coming in there. Sudarshan is joining in with us why the stock is buzzing in trade today. Sudarshan, good morning.
Good morning, Vinny. So it's on the back of the order win that company is likely to have bagged from Indian Army. So Bharat Forge and the PLR system, that's the JV between Adani Defense and Israel weapon industry. So Indian Army has announced an order of almost 2,800 crore, of which 60% goes to Bharat Forge and remaining goes to PLR systems. And on the back of that, you are seeing a big move. And this order is for close quarters battle carbine order. And because Army is looking to modernize its rifle that it's been using for the long time, and now from September 2026, Army is expected to get this close battle carbine, and because of this, you are seeing a big move in Bharat Forge. And remember that we are expecting earnings also from Bharat Forge. On the earnings front, it might not be that great quarter, but because of this order win, we are seeing stock up almost 5%.
Okay, all right. Thanks a lot for that. The other one that's buzzing in trade is Epack Prefab, newly listed company. Post its numbers. Stock is excited. Vivek is with us to tell us more. Vivek?
Well, that's right. So Epack Prefab, not to be confused with the other name, or the other company, which has a similar sounding name. So this particular company, remember, makes pre-engineered buildings, largely similar to what Pennar Industries does. Now, looking at the numbers, the company has actually given the Q1, Q2 as well as the H1 results. We'll focus on the Q2 results. So Q2 results, the revenues higher by over 61% of a lower base. EBITDA up almost 83% on a year-on-year basis. EBITDA margins expanding 130 basis points, and profitability more than doubling. Now, the order book on post-listing has actually moderated a little bit, so that'll be interesting to track how soon order book accretion can come about. But order book stands in excess of 650 crore at the end of H1.
Okay, Vivek, thank you so much for that. Today, the stock is buzzing after its numbers, keeping an eye out on what it does through the day as well. But let's shift focus to a special segment where we will get you a few ideas from profit from Money Control Pro. Jitendra Gupta of moneycontrol.com joins us now to talk about the stock that he's been tracking closely. Jitendra.
Hi, thanks. I think NMDC offer good value considering strong global iron ore prices and domestic steel demand. Iron ore prices have increased from $93 a ton in July to over $104 now, supported by, of course, infrastructure-led growth and new steel capacities. In India, finished steel consumption rose almost 8.2% on a year-on-year basis to 65 million tons during the first 5 months of FY26. This also benefit companies like NMDC. In the first half of FY26, production rose 27% and companies' revenue sales volume increased by 12.4%. It has also raised iron ore prices by 400 a ton in August, while realization in Q1 were already up 9%. This should support higher profitability in the coming quarters. NMDC aims to produce 55 million tons this fiscal and reach 100 million tons by 2030. It is investing in logistics and infrastructure with healthy 6,300 crore of cash position and 4,000 crore of capex plan for FY26. NMDC remains financially sound. In terms of valuation, at rupees 76 a share, stock trades at around 5 times its FY27 estimated EV by EBITDA with a dividend yield of 4.5%, which is quite good, and that should support the stock.
Okay, on that note, we're actually going to slip into a very short break. Don't go anywhere. We'll get you more updates after the break.
Welcome back. You're tuned into Chartbusters. Well, let's focus on the oil and gas space. And to help us out with what's going on there with regard to the sanctions that have been put on Russian companies, Mr. M.K. Surana, the former CMD of HBCL, joins in. Hi, Mr. Surana. Thanks a lot for joining in. First of all, festive greetings to you as well as your family. Well, sir, we want to understand this impact. Overnight, we have this news that US has now sanctioned a couple of Russian companies. Last year as well, the European Union had already put in some sanctions. So with this, a fresh sanction that's coming in there, what kind of impact do you see with regard to the oil and gas space globally?
Okay, there was some disruption. The way I understood is you're asking what is the impact of these sanctions on the...
Yes. European, the EU had already put sanctions on Russian companies. Now you have the United States as well that's put some additional sanctions. So how do you see things change?
So let's take into two parts. The one part is whether these sanctions will actually put out all the Russian barrels out of the market. I don't think that will happen because China still continues to buy, and it will be difficult to implement a sanction in the past also where 100% barrels goes out of the market. Assuming that this hypothesis is correct, that some barrels will continue to be in the market, and assuming that with the current fast-track rollback of the Middle East supplies or OPEC plus supplies, currently the market is oversupplied. And therefore, while you may have some momentary spikes, news-driven speculative spikes because of the information which is come, and some of the people trying to rearrange their supply position, the sudden rush to make the alternate arrangements, that may give a sudden spike. But I think in a slightly longer period, I don't think that the bearish shadow on the crude market is going away with this. And therefore, the crude oil supply should remain moderate. The price of the crude should remain moderate, and the market is well supplied. As far as the products are concerned, there are some supplies which are being made to many countries, and that we need to see. It will depend on what is the exact contour of the sanctions comes up, because there is one shift from tariff regime to sanction regime. As far as the Indian companies like Nayara is concerned, they were sanctioned by European Union, but they were not sanctioned by US as such as of today. And as far as they're supplying in the domestic market, I think that may not get impacted.
Sure. So, I just need to understand that. My question was on Nayara Energy itself, because Rosneft holds 49%, right? So if this sanction that has come in on Rosneft in the US, does it impact Nayara Energy in any way?
See, the question is, one thing is sanction and second is how it gets implemented. Basically, the US sanction gets implemented when there is a dollar payment, it passes through US banks. So as far as the transaction is not in dollar, it will be difficult to implement those sanctions.
Okay. And overall, what is the sense in terms of impact that maybe we could see in terms of exports from Rosneft? Is there any impact that we could see coming in the Indian markets for that?
It depends on the type of the arrangement which they have. Suppose they are buying the crude from Rosneft and supplying the products back to them. So it is like a sort of a tolling arrangement between them. And what is the type of arrangement they have for commercial settlement of that? It will depend on that.
All right. Mr. Surana, I wanted to understand about the discount in terms of Russian crude oil. It was a little bit wider a few months ago, more than a year ago, but that discount actually has narrowed. So at current reckoning, if you could tell us, what do you pick up with regard to the discount?
Yes, what you're saying is correct. The Russian discount, which were substantially high once upon a time, it got narrowed down to $2 to $3. And there may be slight increase because the second quarter normally remains subdued on the supply positions. So there may be slight increase, but still it continues to be in the same range. So the discount which were available on Russian crude is substantially lesser than what it was once upon a time.
Right. Mr. Surana, in any way, if after we understand the deal, could we see an impact coming in on refining margins of these companies globally as well as in India? And do you think this maybe in the next year, couple of years, we could see a reset overall coming in globally in terms of the supply side as well?
See, the refinery margins were on uptrend, if you really ask me. The second quarter, there was an impact of inventory losses because of the sudden fall in the crude oil prices. But now, currently, if you see, the cracks are reasonably good. And so the refinery margin should be good. That's one aspect. The second aspect is there are some impact on the Russian refineries. So the product supplies from there has got impacted. Third is the export curve from the Chinese refineries that may impact some of the supplies. And the second quarter is normally subdued on the demand part. But if the demand picks up, especially on the west, the winter season comes, the gas oil demand will increase. So the cracks on gas oil should be good, and which are already good right now. And I assume that the refinery margin should at least continue to the level which are there, which is better than what it was earlier. And it may improve even further.
Oh, that's interesting, because I wanted you to comment on the refining capacity itself globally. Because we keep reading about a lot of capacities going out of works, whether it's in Russia or Ukraine as well. How is the global refining capacity shaping up right now? And if you have any particular numbers, because there's a lot of these global refineries that have been put out for action. And there's no fresh capex as well with regard to new refineries coming about, no large one. So you expect these refining margins to remain elevated?
So the refineries have got shut down in Europe, basically.
Yeah.
And some of the refineries got impacted because of Ukraine-Russia war in Russia and Ukraine. That has impacted to some extent the refinery supplies. But also there were some additional refineries which got commissioned recently, let's say Dangote, which had its own ups and downs, but at least there was an additional supply. There was also some refinery in the Middle East which got commissioned, and there will be some additional refineries which are the expansion, the revamps which will get commissioned in India in next year to come. So while there is a balance of the thing, what is coming new and what is going out, but overall the refinery margins were better compared to, let's say, what it was there earlier. So I assume that the gas oil crack should continue to be strong, and because Indian refineries are more heavy on the gas oil, that is diesel, I assume that the Indian refineries GRM should be good.
Okay, sir, thank you so much for joining us this morning, explaining us, what these sanctions actually mean and where India stands in this story as well, and overall, the global supply scenario as well.
Watch as the details comes.
Absolutely. Thank you so much, sir. Thank you, and festive greetings to you. But on that note, we're going to actually sip into a very short break. We'll get you more on the markets and stock-specific action on the other side.
Nifty holding on with gains of closer on 200 points or thereabouts. HUL's numbers should be out within the next hour, I think so. And that stock actually has moved to the high point of the day as we speak. Shriram Finance, plenty of buzz that could be the next candidate with regards to some kind of interest. At least that's what unconfirmed reports have suggested. For the time being, the street is building into some expectations, so that one is higher. What's happened in the last few minutes, though? A couple of stocks actually have moved lower. The Bajaj twins, Finserv as well as Bajaj Finance, both of them have slipped a little bit. And JSW Steel as well was trading in the green. That's moved into the red. But otherwise, no worries, Vinny. Things looking good. Markets in the green. Breadth of the market as well positive. Not as much as the headline index. But the advanced decline ratio is pretty much split down the middle, 1:1.
Absolutely, Nigel. A good day so far panning out. And also, do not forget textile stocks. They are buzzing in today. So, Vardhaman Textile, KPR Mills, or even Gokuldas Exports, all of them have picked up pace in terms of today's trading session. And obviously, IT continues to be there as well. But with that, we're absolutely out of time on this edition of Chartbusters. Thank you so much for tuning in. Up next, your Trading Hour.